All right, welcome back. Another episode, 0x live stream, 0x Research. Joined today by a big research crew from the Blockworks Research team. Nick Carpenito, aka OX Metalite. We've got Mark Arjun, Ryan Cashflows Connor, and Carlos. Haven't seen a few of you in a while. Nick, I think this is your second time on the pod. Ryan's been out for some time. He's been working on some of his takes. He's brought maybe some new quips to the table, so glad to have him back. How's everyone feeling today? The markets are a little red, so I don't know. Are we doom and gloom, or are we feeling optimistic?
Feeling optimistic. How about you guys?
Yeah, optimistic as always. I love a little red in the market.
Definitely feeling optimistic on my end.
No, I'm super bearish. I can't take a single down day. It's not in me. I don't have it. I'm selling all my coins. I'm going to cash. It's over.
At the very least, there's something to be optimistic in terms of Blockworks events. DAS London is coming up in October 13th through the 15th. I know Mark Arjun here will be there, so you can get your tickets, come out and see him. Our Lord and Savior Boccaccio will also be there, confirmed. So you can meet some of your 0x Research heroes live at DAS. Use code 0x100. You get 100 pounds off your tickets. Check links in the descriptions or just go to the DAS London website. And hopefully we'll see you guys there. And then another thing to shout out, and Ryan, you haven't been on since we've started talking about this one, but I'll lead this one in for you as well. But we are currently hiring a research data analyst at Blockworks. So if you're someone who loves to dig into the on-chain data, you live in SQL, you like making sense of kind of like the on-chain noise, chaos, turning things into signal, check the link in the show notes, apply. I think we got a little QR code as well. Check that out. But hiring at Blockworks is a big demand, I think, across the whole company right now. So check that out. And I guess, Ryan, if you have anything you want to say as well on the hiring side.
No, man. I mean, the team's unmatched. You know, I have the lowest IQ on the team, so don't look at me and think that that's what you're getting. Like, no, the team's spectacular. It's a really great place to work. Mike and Jason run an incredible company. They're top tier founders, so great place to be. If you're crypto talent, we want to talk.
Love it. Short and sweet. And then one last shout out to Aptos, sponsor today's stream. Appreciate you guys. You'll hear more from them later. But for now, we can get into it. I think one of maybe the interesting conversations, we sort of touched on this a little bit this morning on an internal call, but there was an announcement or sort of an update, a bulletin from the CFTC about an advisory regarding non-US entities allowing US customers to trade on their platforms. Basically seems like they were previously maybe forced out of the US, just due to cracking down by SEC or other like US regulatory stance a few years ago. Seems like, with the new admin, with everything else that's like pro crypto in the kind of Trump admin right now, we're seeing a shift here as well. So I guess the main thing is that the CFTC is saying they've issued an advisory regarding the FBOT registration framework for non-US entities that legally operate outside the US can seek to provide persons physically located in the US market access to their trading platforms. So, that could mean like a Binance, that could mean a Bybit, similar type exchanges could maybe see the, a re-entrance of US customers. The big question mark there was, and we started debating this morning, and I'd love maybe if we dive into this a little more. There was a question of like, how bad does this hurt Coinbase? How bad does this hurt, insert other US based corp today that might, see some new competition from this?
Yeah, I mean, it's very beneficial for me personally. I have so many funds locked in over offshore exchanges after they KYC'd and locked down at the end of 21 and 2022. Like, I'm excited to get some H&T back. That's what I'm looking forward to.
Yeah, Carlos put out an awesome post on Coin versus Hood yesterday. And one thing I caught in there that
Yes, Mark. Yes, Mark.
sorry, you put out yesterday.
Oh.
Moral of the story, though, something I caught in there that I had maybe assumed was a little bit of a lower number is that 75% of Coinbase users are US based. Obviously, I think it's the dominant exchange in the US, and I think one of the safer exchanges that the majority of people use. But that said, it was interesting to see that, and it leaves me wondering what Coinbase's moat is today for their US customer base, at least.
I mean, I don't live there, but is Coinbase any of you guys in the US primary exchange? I'm just like wondering how strong their brand recognition is in the country. They're like the oldest and safest, and they're SEC, they're publicly traded company. So I'm like wondering, what's the switching cost? And then, they have these other features like, the Coinbase One, Coinbase Prime, they have banking services, they have their link to their on-chain stuff. Like, I'm just wondering if these sticky services, and with this friendly administration, as they add more offerings, I wonder if is it going to make that much of a difference? Even if the CFTC allows derivatives, they just purchase Deribit as well. So all of this has me, maybe I'm not as bearish as I should be on this move. I actually think it's a good thing, because if anything, it's going to grow the pie and get, increase competition, possibly get more users in, because they're going to start advertising in the US. Maybe you'll see it on the subways again. But I don't know. Just back to my first question. Is it your primary go-to?
My situation's unique because I'm in New York, and it's basically the only crypto exchange that you're allowed to use. But I think the more Coinbase is a tough one. I think obviously they're going to do well for a very long time. But you do have this interesting dynamic where you're allowed to compete with them for the first time. So, it's a huge market cap. They're opened up to competition for the first time. Just thinking, just like as an investor, okay, it's not the story that it was in 2022, 2023, where it was just like trading at 4 times sales. Like, I think it's at 10 times sales now, and you got a competition. So I think the risk reward isn't what it once was. I'm sure they'll do fine for a long time. I don't even know how much the retail story matters. Because like I think 90% of their volume or 80% of their volume is institutional now. So that relationship is flipped. I could be wrong on that number. We'll fact check me.
No, that's right. Yeah.
Yeah, that's right. Yeah.
How's the revenue mix look despite that fact, though?
Retailers they make more revenue from retail trading than they do institutional trading. Retail is less price sensitive.
And then
that was kind of my guess. Okay.
Yeah, then you think like, okay, then they expand their services to like you get more out of the prime side of the business. You expand the perps, you do the options business. I think that they have the optionality, like banks, like it's like there's just like infinite financial products that they can kind of dream up and sell to customers, and there's like nothing but tailwinds from Coinbase. I do think their distribution is overrated, though. I think that's what you were getting at, Mark. Like, okay, cool, you got 7-8 million monthly actives. Like Robinhood has, 11, and Telegram has 1 billion, and we talk about Coinbase distribution advantage. I really don't think that exists for retail market. I think it's pretty overstated.
Yeah, I guess I would echo some of that. Like, I'm not beholden to NYC regulations and where I can use brokerages or trading services. So what I would say is, like, the Coinbase brand is pretty big. I think if you were to ask the average retail person about crypto, that's, Coinbase or Robinhood might be the names that come to their mind. But personally, I don't use it. It's a little anecdotal, I guess. But yeah, I guess just that interesting part there around, like, can they grow the institutional side of that picture? And if it's, if that's a 10x, and maybe it's not as meaningful to the revenue today as the retail activity is, but we see all the connections they have today via the ETFs and other kind of connections that they've been building. Maybe that's a path to just continued growth, regardless of what the retail user does. I feel like we've been seeing more and more, like, competition over that retail user dollar anyway.
I think when I was looking at the financials, like institution, the revenue purely from institutional trading was a small part. I think it was the 4th largest. And then obviously they make some money from the institutions again with their other services like custody and some staking stuff. But that's it's wrapped into their whole subscription services, so the numbers aren't like delineated out clearly. But it's still it's surprising to me that it has such an institutional narrative. I mean, it is the institutional play, but it's still retail that drives most of it. And then when I was comparing it to Robinhood, of Robinhood segments or like product lines, I was surprised that this was at least the biggest segment was options trading. So Robinhood, bigger than even crypto. And that's just options for stocks, obviously. And so then I'm wondering, what happens when we get options, for crypto, Deribit, and then we introduce that to retail? I mean, if it's already the largest division segment for Robinhood, what could that do to Coinbase's revenues just on the retail side alone, and perhaps more importantly on the institutional side as well?
I guess maybe the other question is, like, what's the user behavior? Like, we know the size of the retail user base on Robinhood, and we, like you just mentioned, we know there's a tendency to do a lot of options trading, maybe even like short-term options trading, and probably also like, short-term crypto and maybe meme coin adjacent trading as well, where they're capturing, higher fees, higher spreads on all those trades. If the average user on Coinbase is just like, DCAing into Bitcoin, that's not going to be as meaningful as if, if they do roll out options and they've kind of started working and rolling out their perps product, like, are all of these users, are they inclined to be doing that activity and therefore like drive that revenue for Coinbase, or is that not really the user base that they capture today? I think that's probably an important question.
Yeah, either way, like Ryan said, I think there's tailwinds. There's good long-term structural tailwinds and catalysts for Coinbase. So, it's not cheap like it was. It's 10x, like Ryan said, and it's trading at, even its PE ratio, it's trading at like 1 standard deviation above its 1-year average, which means it's like close to it's not expensive, but it's not cheap either. It's pretty like fully valued, I would say, but long road ahead.
Yeah, it seems priced for growth. It seems like it's gone from, underestimated, uncared for to, maybe appropriately valued today is maybe the thinking there. Maybe another one to discuss. Carlos, you did a piece on the 0x Research newsletter. Reminded everyone out there to go and check out the newsletter. The team here is putting out great content daily. Talking about Hyperliquid. Is Hype still cheap? I feel like that's something we should talk about. And I do have some of the charts and data that you put together for that one. But, it sounds like Coinbase isn't really cheap anymore. Hype continued to grow, trading volumes up, like market share up, token price up. Is it still cheap? Like, is this still something we're looking at? Is there still a trade here?
Yeah, I guess you can look at it from 2 perspectives. The first is if you just look at it from the L1 perspective, it is now the blockchain, the leading blockchain by REV or revenue. So in the past 2 weeks, he has made $28 million in revenue. It now has a 36% market share. Some people were like arguing back against the post, saying that I shouldn't be able to compare Hyperliquid to these other blockchains. But in my opinion, even if you don't believe it is an L1, even if it's just like an application, like you would still be able to compare Hyperliquid to Solana, Ethereum, etc., just on the dollars they generate for token holders. And just on that metric, Hyperliquid is cheaper today. And then the other thing that I would like to look at is how Hyperliquid has grown versus centralized exchanges. And all the data points out that both in the spot and perps markets, they are taking market share away from centralized exchanges. It is obviously still a long way to go for Hyperliquid to surpass Binance volumes, for example, but they are growing like significantly faster, particularly when you look at like perps data, but also spot.
I have a question. If we are doing the comparison to L1s, right? Not saying this is right or wrong, but then the question becomes: will that premium or that discount that Hyperliquid trades at like converge over time to, let's say, Solana? And I ask because, if we're looking at these things as dollars generated and we look at it as revenue quality, right? Some of these other more generalized L1s, they generate their fees from multiple sources. So if ever there's a slowdown in memes or slowdown in this section, there's multiple other sources that can possibly cushion that fall, right, and decrease volatility, like that revenue volatility. And like, I'm just wondering if, in my head, two equal businesses that would deserve a like multiple premium. I don't know what that would be for the L1s exactly. But then I wonder if there will always be that gap unless like the hype EVM starts to actually get meaningful adoption. But I wonder if that gap will always exist just because of that, that one track trading source.
What I would say is like two things. The first is that if you look at Solana revenue, I would be willing to bet that 80% or more just comes from trading activity. And the same was for Ethereum, like when it was a leading chain by REV, like most REV just derives from highly contentious transactions, and that's mainly like due to trading activity. So at the end of the day, like I wouldn't say like it's super diversified in terms of the revenue they're generating. Like most of the revenue still comes from just trading. And then the other thing is like asking this question, like it's important about L1 premiums. Like, do you think L1 premiums will stay that high forever? I do not think so. I think that they'll eventually, maybe not disappear, but they'll eventually like compress towards a more reasonable multiple. Like Ethereum is like 1,000 times rev. Solana right now, it's like 100 times rev. I don't think it will stay that way forever. Like today we're in a flows-based market, but like eventually if you're like purely fundamentals driven investor, like I don't think you can justify that premium staying that high forever.
Yeah, I think there is. I think you're both right. I think that if you look at daily Hyperliquid revenue, it does exhibit more volatility. So the peaks are higher and the troughs are lower. At least that's what it's been since, like, if you look at the Blockworks Research website, like since basically May, it's 100% correlated to Solana revenue, but it's way more volatile, right? And perhaps that is that, it's not as much. Trading venue, like, yeah, Hyperliquid is a platform. I think it's fair to call it a platform. You have buyers and sellers going there to do stuff. But I do think that the generalized L1s are a little bit more of a platform. Now it's like, how much do you want to bake that into your modeling? I don't know. But I think there is something to be said about the potential, yeah, I think, you know, there is the potential for more durability with an L1 platform. Yeah, that's exactly it. Yeah. Yeah. So you see, you know, they essentially have a 1-to-1 correlation, and, you know, on up days, Hyperliquid does much better. On down days, it does a little bit worse, right? Perhaps that is that, you know, that L1 business model of more diversified applications on top, but who knows?
Danny, I don't want to front run anything, but Ryan, are you saying that Hype is the better beta play to Solana?
For over, yes, yeah, from since May to now, yeah, it has higher up beta and lower down beta for sure. Undeniable.
I think we're understating a little bit the recent traction on the Hyper EVM side, though. Like, take the Hyperliquid platform out of the equation here. You're seeing quite a few apps launching over the past few months and gaining meaningful traction. Now, whether that's sustainable, whether that's driven by points programs, is unclear as of yet. But I've been following this new company, Mercury, which is looking to build sort of a Jupyter mobile style experience for the Hyper EVM. And while that probably doesn't drive a meaningful increase in the short term, I think having all your Hyperliquid apps integrated into a single platform and showcasing for people who may not be in the ecosystem what exists on the Hyper EVM today is going to generate meaningful traction over the long term.
What did so this is very much the Binance model. What is Hyperliquid doing right that Binance did wrong?
Wait, what do you mean?
Yeah, like so Binance has its own chain and they have their own exchange. Right? They have their own kind of platform chain, and then they have their own exchange where they compete on listings velocity. Like, I mean, you know, what did Binance do wrong? I guess that's probably the incorrect framing. Like, they obviously did a lot right, and they're like in control of the Asia market. But it seems like I don't know, it just seems like Hyperliquid is much more dominant today, and a lot of Binance activity on chain is questionable, right? Like, we discount a lot of it. I don't know maybe it's the wrong question.
I mean, I do think Hyperliquid benefits from you don't have to KYC to use the exchange.
Oh, yeah, so that was the big fork in the road then, and Binance complying.
That's probably one part of the story that allowed people to, you know, Hyperliquid and potentially others to kind of re-enter this competition with them. I would say, and we know that, you know, there's users on Hyperliquid that are VPNing in. Not that I'm not going to call them out and you know, tell on them to the whichever authority would chase after, but I do feel like that's a piece of it. And the other part, I mean, this is maybe less so meaningful, but I don't know, airdropping your biggest users $1 million, and then them shilling it all over the very active trading discourse of the market to get others onboarded probably helped as well. Now, obviously, if you were around in 2017, you could have made a lot of money on Binance, but because they, you know, launched that coin at an extremely low valuation, and it's up, you know, 1,000,000% since then. But you know, Hype's kind of given their early users the same chance to kind of make it, and maybe that's fueling a wealth effect right now as well, because the BNB sort of had that in 2021 when Binance Smart Chain was incredibly active and the token had risen quite a bit after offering it up in like an ICO.
I'm not the best person to explain this, but like, in my opinion, a big difference between the relationship of Hypercore and Hyper EVM, and call it Binance Exchange and BNB chain, or Coinbase and Base, is that for decentralized exchanges, Base and BNB are not really connected to the centralized exchange, in the sense that people building on Base can't really like tap into like Coinbase exchange liquidity, if that makes sense. Whereas with the Hyper EVM, with the core writer operate, you can sort of like make use of the like the exchange of the Hypercore exchange becomes composable with the Hyper EVM ecosystem. So for instance, you can use a first position as collateral in your money market. That would be like one example of like this composability. Like it's supposed to grow in tandem and be composable with each other. Whereas with BNB and Base, like sure, they have their own chain and they can direct users there, but they're not really like connected with the exchange, if that makes sense.
Yeah,
I think Hyper. Go ahead, Mark.
Go ahead. Okay, no, okay. I was just gonna say, I think that's a good point, Carlos. I do think it's it's kind of slowly changing. They're trying to like work in that tokenomics, that link between the chains. Like that Morpho integration, the DEX integration on Base, and I see Binance doing some stuff as well. And to that point, Binance actually used to do a lot. Like at one point in time, 2020, 2021, Binance was my go-to exchange, but then here in the EU and the UK, they cracked down. They had to get rid of their Binance US dollar. They had to get rid of their staking services. They had to get rid of a lot of the services that they offered. And then I just left Binance because it was just no longer giving me what I wanted. But I mean, I will say that I don't think, Binance is still the leading exchange. The token is at an all-time high. So like things are still going well in their regards. Maybe we don't see it as much because of our Western bias. But yeah, I think what they did wrong, I think a lot of what went wrong was like out of their hands. Yeah, sorry, Nick, go ahead.
No, you're good. I was just going to say, I'm not sure what's driving this, but there's certainly a higher density of talent and developers on the Hyper EVM. Like people building novel use cases, not just forking Uniswap to a new chain type stuff. And so, yeah, I don't know what would potentially be driving that, but you're definitely seeing the developer adoption accelerating quite a bit over the last few months, and I don't expect that to slow down anytime soon.
Yeah, I think those are good points. I think the regulatory crackdown as well, Mark, like mentioned it, but I think that opened up an in for new players to kind of seep in, or existing players to maybe take up more market share. And to your point, it's interesting how well Binance and BNB are doing despite all of this. Like it's one of the best performing altcoins cycle over cycle, or over the past like 4, 5, 6, 7, 8 years. BNB coin would be way up that list. So I think that's an interesting maybe sort of counter to point out, is that they are doing extremely well despite all of this. But to Hyperliquid's credit, I do think maybe one other thing, like an area where BNB sort of did things wrong, is that they kind of put out the BSC chain, and they built that early DeFi ecosystem, and I feel like they kind of just let it sit around and do nothing for a few years. Like it kind of ignored it, and maybe part of that was a result of the regulatory crackdown. Like maybe they couldn't be so involved in the on-chain DeFi landscape for those reasons. But I do think, if they had the opportunity to kind of like double or triple down on what they were doing there, invest more capital in the, the apps that were being built. A lot of the stuff on BNB is like, it's like forks of EVM, apps. So they weren't really doing anything novel, and yet they were still very successful. So I think if they had been able to, or had spent more time there and were able to, pump out or get, consistently new developers building new applications there, they might even be more successful today than they arguably are now. So hard to say if that was all, regulatory, evasion or kind of like avoidance related, or partly their own fault.
Yeah. One last thing I'll say about Binance is just outside of the US and the UK, it's still the most used exchange like for crypto. Like from my perspective, it's still like the easiest way to on-ramp and off-ramp. And so I just think like despite like the BNB like headwinds, like Binance, the exchange as it like just the exchange is still like super useful. And objectively, it's the most used exchange in the world still.
Love it. All right. Want to go on to our next topic, but before we do, I want to do a quick shout out to our sponsors for today's stream. Aptos. Bitcoin DeFi is heating up on Aptos with nearly 400 million in BTC assets on chain. Aptos users can now earn yield on their Bitcoin via Echo aBTC and OKX's xBTC without the typical bridge risks and high fees. Thanks again to Aptos for sponsoring today's stream, as well as EigenLayer. Is your treasury losing value to inflation? Learn how to make digital assets like ETH and SOL productive with uncorrelated, protocol-driven staking rewards. For CFOs, DATs, and corporate treasurers, the path to integrating liquid staking and restaking should be risk managed and aligned with long-term strategic goals. The Productive Treasury report from Liquid Collective and EigenCloud outlines practical adoption and a forward-looking vision for the role of the modern treasury as a strategic enabler of new technology. Read the Productive Treasury report today by following the link in today's show notes. Let's get back into it. Mark, you mentioned one of the things I wanted to highlight today or talk about. We kind of debated this one internally already, and I know Ryan Cashflows Connor is maybe cooking something up, at least in his mind, or maybe he's got a report to follow. But this idea of like the SOL DAT trade, I think there's been a lot of kind of general chatter and discussion about this. ETH kind of definitely had its DAT trade. The asset itself up significantly on the year. The largest ETH DATs have accumulated billions in the native asset. We're seeing there already are a few SOL DATs, though not as large, like as a relative percentage wise of SOL as some of the largest, BTC and ETH DATs. But we're hearing rumors and announcements of potential raises in the billions of dollars from the likes of Pantera and others to do, bigger SOL DAT efforts. I guess I want to just kick off the discussion of like, maybe the simple question is that's been talked about is this priced in, or is there still like this SOL DAT trade that's out there where you can get long in advance of these potential tailwinds?
I mean, it's definitely been front run, but at the same time, not a single dollar has went in like buying SOL from these new DATs that we've seen news over the past few days, right? Like Galaxy and Multicoin are raising $1 billion. Pantera is raising $1.25 billion. Sharps Technology raised $400 million. DeFi Dev Corp announced $125 million raise. They still haven't bought like on the open market. So even if people are front running it, like you will still see positive flows like into SOL going into Q4 towards year end. I think the big uncertainty is like what percentage of this raises is going to be in locked SOL versus actually raising cash to buy on the secondary market, and we can debate that. But yeah, that's just my 2 cents.
Before I talk about ETH, on that locked SOL versus on the market, I wonder if it makes a difference, because in one end, if you buy it like OTC, then it doesn't really have any buy pressure on the market. But then if you buy it on the market, I don't really see the difference. I don't really see the difference between the two in the longer term, because it's you're taking it out and you're not going to sell it anyway. So I mean, does it really matter where you buy it from? Because if it's locked SOL, it's if it's from the foundation or for somebody, like they just wouldn't have sold it, if I'm making sense.
I do think it matters though, because if you're buying the locked SOL, you're not impacting the price on the secondary market. Like, or am I mistaken here? Like,
No, you're right. I was more thinking about it from the price point of view. So yeah, if you buy it over, if you buy it over the counter, you don't actually move the price.
Yeah.
Which I don't know. Maybe some people want. Maybe it depends on the company too. Yeah.
And you're giving extra liquidity to the people selling you the locked SOL, right? Because they are able now to just sell the stock, like because they don't have like a vesting schedule or whatever. Like they just can like exit their position.
I guess it could be longer term supportive to the asset if that keeps those locked SOL sort of in place. If these DATs are just going to let that sit there, and those would-be sellers in the future have now been, they've sold whichever DAT code stock, like Carlos mentioned, and it's not like it's out of their hands now, sort of wrung out of the market. But in terms of, I would agree, like in terms of the immediate price action, it feels like it is material, just because if I'm raising 500 million locked SOL behind my DAT co, then all of the money that I would potentially shove into the market is only going to come from like the ATM of me selling the shares and then buying back SOL. on the market. Whereas if I raise 500 million in cash and I can immediately put that into the asset, and then I can also then sell shares when I'm, you know, trading at a premium to MNAV, then you get sort of like that double whammy effect.
Yeah, okay, that's fair. But I mean, for me, it's market dynamics. It depends on when it is. You're either going to have sell pressure or you're not going to have the buy pressure. So it is. But then, you know, you mentioned that earlier, Danny. You mentioned that ETH had its that trade, right? And then I was looking at our treasury dashboard, and I was looking this month, August, which isn't even done yet, how much ETH has been bought by DATs, and they bought roughly, I think that's 1.6 million, which is 1.4% of the supply from August 1st to yesterday, August 28th. And then I just looked at yesterday alone. They bought 0.1% of the supply just yesterday alone, and which is the most recent data we have. So it still seems like that trade is still on. And you know, while MNAVs have decreased, I wanted to compare to emissions rates as well. So on average this month, these DATs have purchased 22 times the emission rate, like 22 times the daily admission rate. Like that's how much pressure they're absorbing off the market. And we're not even talking ETFs either, right? Or anything else. We're just talking DATs. So I still think others will pop up. I think there'll be multi-asset DATs soon to come as well. And I don't think, you know, a lot of, you know, the big players in this space, they're not trying to rug pull, even though I think we're very used to that in crypto. Like they set up these company structures for long term. They have the Michael Saylor playbook in mind. So I expect this to continue to be ongoing, and I think it's going to be just as supportive for Solana as well.
Yeah, I guess the one thing I'll comment on the ETH side of it is that like expectations are a big part of all markets, and so when you look at the MNAVs today or the premium to MNAV today versus what they were a month ago, and you look at the amount of funds that they were shipping in then versus the amount that maybe they have or can or will, over the next, over the forward month, the picture is materially different if, you're trading at 3x to MNAV and you can consistently like be raising new cash to then shove into ETH versus when you're trading at 1.1 and like your forward picture for raising more funds to put into the asset are significantly reduced. So I guess that's where I would say, like, not that the trade is necessarily over. I agree with you that I think more will raise. Like we'll probably continue to see these until, unless they're all unless they all get to a point where they're trading, 0.9, or all at a discount where they just literally cannot, they have no other means to raise cash to put into the asset. It probably continues, but like the big chunk of the move might be mostly behind us here.
No, yeah, you're right. I think I think just if you could pull up the MNAV chart and just like zoom in the past like few weeks, maybe you will see how strong that compression has been. But yeah, Ryan, sorry, go ahead.
Yeah, I agree with you, Danny. I think that there is. Look, if you extend your time horizon long enough on any call, you might be right? So like, I think 6 months, and yeah, I think this phase of the market is over. I think the closed-end fund market is most constructive here, whereas like an equilibrium for this market. Where if you look at like fixed income closed-end funds, they're actively managed things. They have, the reason that they exist is so that they can give investors access to esoteric fixed income exposure in a liquid way in a basket. And look, when they're doing really well, some of the top performing ones will trade at 20% premiums to NAV. When they're in steady state, 99% are trading at discounts. Maybe a handful will trade at premiums because like the manager of the basket is like been particularly good, and really investors just chase it. So, it starts trading at a premium after like the things have already gone up. So usually like retail misses. It's like very similar thing with the DATs. Prices right now are out of whack. Like, I don't think DATs are a bad thing in a vacuum. They're certainly not. They're not. But a 2x premium is incorrect. That is not what you want to be participating in. So like when I think of like what should the premium look like if one exists at all, it's like, okay, like you subtract like the management cost, So that should be a discount. And then you want to like add some ability to generate staking yield, which is like at most 7%. But then like that's also market return. So you don't want to pay a premium for that. So that goes back down to 0. Then it's like, okay, do you have the size to transact with the foundation repeatedly at a discount? Okay, maybe you do, like give it, single digit premium for that. Like at best, bull case, like it's ultra bull case is like a 5 to 10% premium on these things. Maybe you get something like Sailor, who I actually think that the Tom Lee framing on Sailor is like really interesting, where he describes Sailor as like the sovereign put. If you want to buy in size and not see price impact, the only place you can go is to Michael Saylor as a sovereign nation who wants to move Bitcoin on their balance sheet. So like that's actually a really interesting framing, and I think maybe that's why like MicroStrategy is special, but I don't know. I struggle to see why 99% of the DAT ecosystem shouldn't trade at a discount in steady state, which I think it's like a 6-month thing, 6 months away.
To the point about like a massive buy into getting Bitcoin exposure, it does feel like, IBIT, for example, has nearly eroded that advantage that they have, right? Like that, I want to say 70 billion market cap or so, and strategy maybe trades at 90, 100. So you can maybe continue to make that argument for a little bit longer, but I think it, unless unless we see another big massive growth for strategy on the go forward, like the consistency of inflows to IBIT seems like eventually that relationship will flip.
Yeah, the path dependency there, it's like going back to the closed-end fund example. Like the reason that they are popular is because like it's hard to get access to esoteric like reverse floating fixed income like idiosyncratic exposures like non-agency RMBS. Like you can't do that as a retail person. CLO exposure is like very hard to get, so it's like you buy a closed-end fund. Funds aren't allowed to hold crypto assets. They don't have a custodian, right? Like they might be barred from doing it in their fund docs. And like, okay, I have to onboard a custodian. That takes 6 months. I have to change my fund docs. I have to pay lawyers, and it's like a multi-month process. Okay, so if I need crypto exposure, MicroStrategy is strategy is a 1-to-1 correlation with Bitcoin. It works. And I think that that's why these DATs exist. It's like this weird path dependency where like people want that exposure, but the regulatory environment hasn't caught up. Market microstructure hasn't caught up. That's going to change with, like you said, like the ETFs, like that's going to reduce that demand.
And maybe the final question is like, I mean, wouldn't these funds be able to buy these ETF products today? Or could there be restrictions there too? Because my feeling is that if you can buy like strategy, I don't understand why you wouldn't be unable to buy IBIT or ETH.
Right. Yeah. So that's already impacting. I think the premium on MicroStrategy's premium was like a multi-billion-dollar. It was like in the tens of billions. I think it was like $50 billion premium to what they owned, and now it's something like 10 or less. That relationship still exists with Solana. Like there's a lot of people who won't even purchase SSK because of the you're just not filling your fiduciary duty with like the tax structure and like a 150 bips management fee or whatever it is. So yeah, those structures still exist.
Yeah, just pulling up, we have the MNAV chart for MicroStrategy. So yeah, I mean as high as and probably even higher in the past, but trading upwards of like 3 times back in November, and now 1.5, 1.6. So yeah, it's been trending down consistently.
Amazing.
Yeah, I agree. No, I agree with the points here. Like, I don't think it makes sense for DATCos to buy ETF shares, especially for proof of stake assets, because you will be foregoing a majority of the staking yield. Like, if there is a bull case for DATCos, it is that they can be more efficient at accumulating the underlying token, and they can do that via like taking the majority of the staking yield, like I could see a long-term scenario where these DAT goes, for instance, on Solana, like buy GTSOL and go loop that on Camino Multiply, and that way they have like a 15% yield on their like underlying tokens, and they're more efficiently accumulating SOL than an ETF, which has more restrictions as to like they can't stake the majority of the fund because they need to have like enough liquidity to fulfill daily redemptions. So in that sense, like if you were to make a bull case for that goes, I think that would be it. Like being more efficient at accumulating like the native asset on a per share basis.
I think there's an interesting question here, and something that I don't have any context on, but maybe you guys can get into is James Christoph was asking in the 0x Research Telegram this morning alongside Dan Smith and Noah Goldberg. But the conversation around like, does it make sense in where you have these basically public companies who are then essentially operating as like on-chain funds or even hedge funds? Like, is this like a regulatory arbitrage today that gets closed? Does the SEC or someone else crack down on this in the future? Because I don't have all the context here or knowledge of the law, but I don't know that this is like typically something you'd be able to do without being like an actual hedge fund, and then access to being able to purchase exposure to that would not be as simple as just like buying a stock on the stock exchange.
Yeah, I think that is, again, going back to the closed-end fund example, those are a lot of the closed-end funds, especially in the fixed income space, are hedge fund strategies that they just sell in a different wrapper. So yeah, I think it is. I think it is a bit of a regulatory arbitrage, but it's TradFi does it too.
And then maybe I'll do the reverse side of here, is that if the current administration is in full deregulation mode, maybe it's a moot point, and they're going to make private equity open access to retail. They're going to make XYZ other thing open access to retail. Like maybe this becomes a sort of unregulated piece of the market, and these DATCOs are enabled to kind of continue operating as is. I guess that would be sort of maybe the bull case. Cool. There is a second piece to this conversation that I want to dive into with all of you. Before you do that, let me give another shout out to our sponsors for today's stream. Aptos, with nearly 400 million in BTC assets on chain, supported by a secure, fast, and affordable MVM environment, Aptos has become the BTCFi growth chain. Aptos users can now earn yield on their Bitcoin via Echo's aBTC and OKX's xBTC without the typical bridge risks and high fees. With support from Echo, OKX, and Stacks' SBTC, Aptos is the place to go for best-in-class yield on Bitcoin. Appreciate the support, Aptos. And our other sponsor, EigenLayer. Corporate and protocol treasuries face a major challenge today. Cash and traditional instruments are losing ground to inflation. A new industry report from Liquid Collective and EigenCloud lays out the next evolution of the digital asset treasury, moving beyond just passively holding Bitcoin to actively making digital assets like ETH and SOL productive through liquid staking and restaking. For CFOs, DATs, and corporate treasurers, the path to integrating liquid staking and restaking should be risk managed and aligned with long-term strategic goals. The Productive Treasury Report outlines practical adoption and a forward-looking vision for the role of the modern treasury as a strategic enabler of new technology. Read the Productive Treasury Report today by following the link in today's show notes. Thanks again to our sponsors for today's show. Let's get back into it. The other sort of half of the conversation that we went full into the DAT piece. The original question here is like, is there still a trade for SOL? And if there's a trade for SOL, is there a trade for SOL beta? With this sort of potential DAT story coming into play for Solana. I'm curious what you guys think. Is this something where, we still see upside because, the DAT, whether it's locked SOL or unlocked SOL, like it doesn't really matter. Like they're going to have a premium to MNAV, like the same old story. They'll raise cash, they'll buy the asset on the open market, they'll push the price up. And given the size that they're at, like relative to the market cap of Solana, it should have some meaningful impact regardless of front running. Do we think there's a play here for SOL, or is it even better to go and look at, SOL alts, some of your big ones like Pump, Jito, Jupe, or even just general like SOL DeFi tokens? What do we think?
I guess I can go first. I think all of the above would be my answer. Is I do think like we'll see tailwinds for Sol in terms of structural inflows from like TradFi. Like since 2024, like BTC and ETH have been the only two assets with access to TradFi flows. And now Sol is like joining the party as the only other asset, like with that access to institutional flows. So it's not just DATCOs, it's also ETFs. There is a very high likelihood that staking ETFs will be approved in October. And these ETFs will have a more favorable tax structure than Rex Osprey's SSK, because Rex Osprey is structured as a C Corp. So staking distributions inside the funds are taxed to investors as dividends. Whereas with the staking ETFs under the 33 Act, you essentially don't have that. So they're more tax efficient. And you have like 17 pending applications from ETF issuers. So you will have a lot more distribution. The other thing is that they will include in-kind recreations and redemptions. And potentially you will have a GTSOL staking ETF, which is still unclear. But GTSOL staking ETF would be a lot more operationally efficient than a plain staking ETF, staking with a third-party provider, because you can stake a higher portion of the fund. All this to say that DATCOs will have this added tailwind of also going live with ETFs. And what we've seen for Ethereum in the past 2 months is that for every $3 that has gone into DATCOs, $2 has gone into ETFs. So you kind of had this flywheel of not just DATCOs buying the underlying asset, but ETF flows growing in tandem with that. And regarding like the beta question, I do think that Solana ecosystem coins are undervalued today. I think Pump has taken back market share. You mentioned Pump. And they are doing like $1 billion+ in buybacks on a daily basis. I do think it will meaningfully re-rate higher if this continues. And a bunch of Solana DeFi ecosystem coins have like the momentum if Sol continues to do well. Like I mentioned, GTSOL ETF, like obviously that benefits Jito. Jupiter launched like its money market with Fluid. Camino can benefit from that because depositing into the money market. So a bunch of tailwinds for the ecosystem at large, I think.
Yeah, I
Yeah.
think pending. Go ahead, Ryan.
No, go for it, Nick.
Mine's short. Just pending regulatory approval. I am definitely bullish Jito and definitely bullish Marinade. I see a little bit of a Marinade comeback story on the horizon here. And then as a sort of a derivative of that, 00 after they go live, I believe will be one of the better Sol beta plays if institutional staking, not institutional staking, but staking by these institutions, DATCOs/ETFs, becomes regulatorily clear and more mainstream.
I think that's a great call on 00. Yeah, I agree. It's really exciting. I'll give you the bull case and then I'll give you a bear case. The bull case is that, yeah, you kind of have a double whammy of TradFi flows. You had the ETH ETF for a while, kind of floundered, and then DATs came along, and then you saw the thing really take off. And so, you know, you have both of those things happening with the same time as Sol. You also have a very strong fundamental story, fastest growing ecosystem in crypto, #1 by most measures, and #1 on metrics that I think are very familiar to TradFi, which could really help. You have strong revenue generation and a more favorable multiple on Sol versus ETH. And then a lot of things in Sol ecosystem are just objectively cheap. I mean, Pump, fastest, you know, breakout consumer app. Camino's a single digit multiple. 00 is extremely exciting. The rise of these, you know, just the quality of the builder. It's like a bunch of HFT guys, like, you know, building their prop AMMs. Like it's exciting stuff that's going on over there. Bear case is that the ETH thing caught everyone off guard. You know, it was happening, and then you're looking at it and you're like, is this really a thing? Like, are we actually going to pay this much premium to get exposure? And are like, is this actually happening? It was almost so absurd, like the premiums that you saw in the market for these vehicles. And it just took off, and there was really no room to, like, you had to act fast. And I think a lot of it was like panic buying. This one's very widely telegraphed. Like the playbook already happened. So the market's already prepared. And typically when the market's already prepared, the thing that you think is going to happen, it's like usually the opposite that happens. So while like I can do like this check the box of all these good things that happened to Sol in the fourth quarter, there is this overarching risk that it's a little too telegraphed, and like therefore the thing won't happen.
I think the other interesting thing is going to be testing, like, I think like Sol, like when you look at Sol flows, like you don't just look at like the positive, which is like the buying pressure that will come from DATCOs and ETFs. You also have to look at the negative, which is like unlocks and inflation. And inflation specifically, I think, has been very detrimental to Sol in the past year in terms of like just price action. And I think like it's too high today. And I think that CMD 228 would have been net beneficial for the ecosystem. Like the people who are against CMD 228, I'm thinking figures like Lily, the CEO of the, or president of the Solana Foundation, like argued that nominal inflation being high is positive for institutions coming into the market, like with ETFs and DATCOs, because like if you see a staking ETF that's paying you like, I don't know, 7% APY, then you kind of buy it. Like that's kind of like the Lefker thesis. So it would be interesting to me if, because the staking ETFs have a high APY, same as the DATCOs, like does that really like benefit in terms of inflows? And I think that would really like put to the test this like argument against CMD 228 back in April or March.
Yeah, that's a really good point, Carlos. I'm gonna second the flows thing. Like with even with the ETFs, if you go in our ETF dashboard and you look at Grayscale's ETFs alone, and you look at like their monthly flows, ETHE, you see it's like negative every single month since launch, and it was outpacing the inflows coming in. And so I mean, like the ETF was actually, the launch of the ETFs was actually a negative catalyst for ETH. And then with to Carlos's point with CMD 228, if all of these institutions start staking and there's more emissions coming on to the market, I don't know how of a good thing that is. Even with ETH, if Ethereum wants to have this store value narrative, I'm in the camp that even they should lower their emissions, because you just want to have a negative emission rate, like a higher burn than emissions, just for the narrative, just for the store value narrative, if not anything else. And to kind of revert back to the main point about SOL and beta, like some weeks ago, months ago, when Pump launched, we were talking about it, and I didn't get in because I just did my very left curve math, and so it was the most valuable app without an L1 chain on the market. And today I went and checked it out again. It's now the third most valuable, Aave and Jupiter being the two most valuable. But I just annualized last 30 days of sales for each of these three, and Aave is trading at 32 times sales, Jupiter 11, and then Pump is at 7. So I mean, even if you're not thinking it's SOL beta, I mean, 7 times sales still seems relatively attractive in this space, right? So and that's $500 million in annual revenues, by the way. I mean, like, what other crypto project is doing that? Insane. And it's not even like we're at crazy meme hype stages right now, so it looks attractive to me, and I might like just do a little bit DCAing starting this weekend. NFA.
Yeah, I do like the I think I want to comment on both points. One around the ETFs, like for SOL, at least relative, I'm excluding ETH here because I think Carlos mentioned, but the ETH ETFs have had sort of an outsized impact since the DATCO treasury mania of the last couple of months for ETH. But at least relative to like BTC inflows by market cap, just the SSK or the Osprey SOL ETF is sort of sizing into Solana on a nearly relative scale as the Bitcoin ETFs do today relative to the size of the market cap. So something I'd be interested to see is if the large players come into the market for SOL ETFs. Your BlackRocks and whoever else get in there, the more trusted names. If there's not additional outsized flow impact to Solana, because we just know historically from looking at all of these come into the market, like would expect BlackRock to have the largest flows of any of the ETFs, and then kind of go down the line, Fidelity, Grayscale, et cetera, to be sort of downsized from there. So could see upside for surprise for general ETF flows, and especially so if the sort of DAT plus ETF thing plays out like everyone's expecting. But I like Ryan's point around caution there. When everyone's sort of expecting it, maybe maybe the market front runs this a little bit. Maybe nothing happens for 2-3 months. We kind of go. We've sort of consistently seen this both with Bitcoin and ETH actually. Right at the launch of these vehicles, that sort of like nothing happens, and then all of a sudden something big happens a few months later when no one is expecting it again. So maybe we're sort of doomed to repeat that again. But then on the pump side of things, I do think some things worth sort of highlighting is, it looked sort of doom and gloom, a month or two ago when they started losing market share to Bonk. But over the past couple of weeks, like that trend has entirely reverted. They've started shipping 100% of the on-chain revenues into the token. So yeah, overall, like the valuation in the picture for pump, everything has looked up, and the price is continuing to range, at levels below the ICO price of 4 billion. So it does seem like there's some upside for pump, especially if we enter like a SOL season. It seems like a pretty good candidate for some outperformance there. I think the other names listed are pretty good, but I guess the big thing I would point out for like a SOL season is, I don't know, if you kickstart like a little bit of a gambling, meme coining, trenching wealth effect again, and you can, sort of pump up the launchpad pump fund numbers again, then, it makes it look even more attractive. And then, it's beta to SOL, and it can maybe sort of kick a little bit of a reflexive loop there.
People on the timeline are still questioning if pump is aligned with the token. It's like unreal. Like how many days in a row do they have to pump back 100% of revenue into that token for you to like consider that there's alignment there? So yeah, I agree with you, Danny.
Yeah, and I do wonder if the main thing is, I don't know, like the sort of like trench burnout. Like Hyperliquid doesn't seem to have this problem being in the perp space. There's not really like at least when it comes to sentiment within kind of like our space anyway. You see people all the time like memes aren't what they used to be. You can't hold a meme and make money anymore. Like average hold time is 6 seconds. It's all just like a scam, pump and dump, garbage, dog shit, whatever. And like perps and perp platforms don't really have that sort of like sentiment narrative. So, and obviously the upside for Hype as well is that, the token is up a lot. The platform is also growing. Metrics look really great there. So, I don't know if this is just like additionally a sentiment price related thing. The token looks like crap right now. People are burnt out from losing money on meme coins that they thought they could be a billionaire on, or, make $1 million on, and it didn't play out. I do think this is one of those things where, if you get a SOL season and pump price goes up and metrics go up, then that sentiment completely reverses, and it's like, oh, it's the best product ever. I love memes. I love pump. The token's up. We see that price leads narrative like all the time. So I could see people completely flip on this in weeks if that does happen.
Well, yeah, and I think you're even starting to see it in the data today. Like as a trench person, okay, like you're pretty steady on revenues for the past few months. So like really no change. But like on our Solana Launchpad dashboard, the number of tokens launched across launchpads that has achieved $1 million market cap is at new all-time highs as of I don't know. I can't say. I feel like I mean, I might have to take this back. I feel like the data is wrong. But yeah, so like the the numbers approaching like all-time highs, and like I don't know, like I know that there's a ton of coins launching. Perhaps like the graduation rate isn't as attractive, but I still think like you're getting the runners that keep people like paying attention. Like objectively, like looking at the revenue, you are seeing that that there is a steady state, right, that's been reached, and that like de-risks the token, right? Like you have this like minimum viable business that's throwing off a lot of cash, and like above that it's just like optionality on new products, and hopefully like an Axiom competitor, like hopefully streaming takes off, things like that. So yeah, I think it's, you know, I think risk adjusted is pretty strong.
Yeah, I just want to highlight, we have the chart on Pump's historical revenue, and you can see the dip down when Bonk took market share in this space. But yeah, otherwise it looks like they've kind of just been, they've hit this consistency point here of, you know, call it 8 to 10 mil a week in revenue, which, you know, now is getting shipped into the token. So yeah, I guess outside of everything else, the other question mark is just like, what's the forward expectation for the platform? Do you think, if you think the trenches are cooked, then of course, you know, maybe you're not going to be bullish on a Pump token. If you think, you know, on-chain season returns, then it should be accretive, and you'd expect to see some outperformance here. And if you believe in Pump and their ability to grow in the future, then everything else stated today, like, it makes it look cheap relative to sort of where they're running at.
I agree. Do you think they'll lean into streaming more? Like it feels like the next like area of growth.
I think so. I mean, I think they're already kind of leaning into it. Streaming's tough though. I think it's a really tough market to enter. For one, like I think even the streaming giants today, like don't make money. I know that like even though Twitch is valued very highly and owned as a subsidiary of Amazon, like I think they basically operate that as a loss to Amazon, but all of the sort of baked in benefits that, and like, you know, sort of integrations that Amazon can then run from there. You know, you get your Prime membership, and maybe that gets you some bonuses on Twitch, and maybe creators on the platform then route users to buy products that are sponsored or recommended on their streams to then go purchase back on, you know, on the e-commerce website, things of that nature. So if it means that Pump as well, and we see this with other, like Kick as well, is operates an online casino, and their platform, like they're definitely hemorrhaging money on the live streaming platform Kick, but Stake, the business, I think is hoping that this maybe opens up potential revenue by driving, you know, maybe new customers to, you know, if it's slots or other venues to turn revenues on them. So if that's a playbook here for Pump, like it might be a little bit of like a loss leader, and they might need to shove, you know, some additional incentives at it. We've seen them play around with those ideas, like, you know, $1 million content ideathon. I expect that they'll probably have to keep doing that to get people excited. But the benefit they get is this sort of like token associated with the stream as well. So maybe they don't have to incentivize directly with dollars as much as they otherwise would have if the token acts as an additional incentive for creators. But I think it's going to be challenging. But it's a space I'm watching. You know, small streamer coins, like it could be a narrative. It could be a narrative that, or something that grows into a bigger narrative, and you know, you have a chance to be early there because there are very few and they're not worth very much.
I like the streams. I like the Gainsey stream. I think it's like very small proof of, like, I enjoy it. I tune in, and like the clipping helps. Goes viral. It's pretty good.
You guys may disagree here, but I think that a business model like Pump demands a constant flow of new users, because a certain amount of users on a daily basis will become disenfranchised and won't come back, right? And so, like you said with Kick, that a casino is a great way to offset that a little bit. But I think for Pump's business model today, a lot of what we're going to need to be seeing is ways to bring streaming enthusiasts and crypto noobs / people that have never touched crypto before into the platform. And yeah, I think incentives help that, but I think leaning into live streaming is really the best bet they have right now.
I might disagree to an extent, just because people earn paychecks and they can keep shoving in 100 every week. But and like it's not like casinos go out of business because all their customers lose all their money and then never come back again. Like, sure, like maybe your customer comes once a year. You know, they fly out to Vegas and they go to the casino for a couple of days, and then you don't see that customer for a year. But all the other, you know, the customers kind of flow in and out depending on when they have cash and when they're feeling, you know, excited to gamble their money. So that's maybe the one counter I'd have, but I do agree in terms of like expanding their market. Like it does feel like it could be meaningful if they could onboard some creators with meaningful audiences who otherwise are not trading meme coins today. Like that would be a definitely a net positive.
And maybe to challenge my own point a little bit here, your pump fund, like user retention, is extremely high comparative at least to the other launch pads that we're seeing today. And I think user retention is probably a metric that I think very few people are tracking closely, but one of the most important here. And so user retention on streaming platforms is obviously very high as well. So hope to see additional incentives that align pump with closer to a interested, not gambling audience.
Maybe a thought you just prompted for me is that I would imagine like we can, assuming nothing else changes, like I would imagine you'd expect the activity on pump and other launch pads and trading platforms to sort of continue in this cyclical fashion where, you know, when everyone is feeling like we're so back, that's when they want to jump in and gamble their money. And then when they feel like it's so over, you know, maybe they stop trading for a month. And we see like those reflexive cycles in activity. I guess if you can drive this like live streaming audience that tunes in every day and doesn't, you know, isn't like logging off because the coins are down. Maybe they're just logging in every day, no matter what. It could maybe bring some like positive buffer or like put a floor on their daily activity, which could be a plus as well. But I guess we'll see. I think it's sort of an unproven thing, and we're sort of seeing them attempt to prove it out in real time. Zora is like a different expression of this, right? Like, can the Instagram model work? Pump is going for the live stream model, and you know it's still small. Look at most of these coins; they're pretty tiny. The product is still in a very early stage. Like, I don't think any of these users today would tell you that like using the Pump live streaming platform is equivalent or, you know, better than the other existing services out there. So it's going to be an uphill battle for them. Cool. Well, I think we can leave it there for today, gentlemen. Any other last thoughts or exciting things going into the weekend? Everyone headed out to touch some grass, I hope. Otherwise, I'll do a couple of quick shout outs. If you have data analyst chops, Blockworks is hiring. We are looking across all fronts, but certainly on the data analyst side of things. So if you are in the weeds of on-chain data, check the link, check the QR code on the screen or the links in the descriptions, and we would be happy to chat with you, assuming you got the chops. Various segments of the business are expanding right now, but certainly on the data side, more and more we need lots and lots of data to keep this business growing. And then DAS is coming up in October, and be sure to check out the 0x Research newsletter and hear from all of these fine gentlemen on the research team, as well as the 0x Research Telegram. Come chat in there. We pull topics from there. We find questions in there. A lot of good discussion. I think a lot of people are making close friends and maybe even enemies at sometimes in that chat. So feel free to hop in there and get in the discussion. But otherwise, I'll leave it there.
The newsletter is fantastic. If you aren't paying the few $1,000 subscription for the institutional product, the newsletter is like we're giving away too much there. So get it while it's hot. It's like very, very good. It's too much alpha that we're giving away for free just for an email.
Definitely, 100%. Great insights into the sector, into the space every single day of the week. So definitely check out the newsletter, newly revamped and coming at you hot from the analysts. But other than that, until next time, and thanks for coming on today, gentlemen. We will see you all next week.
See ya.